Hello, this is Data Trader Pro with a nightly update for, I believe it is, yes it is, it's March the 7th. Alright, you all know we've been having a solid up move in the indexes. A lot of people are really bullish this move, I see. Still some bear stragglers here and there on places like StockTwits and Twitter. I've been fairly neutral based on the beginnings of some divergences in the market internals and volatility. Volatility certainly bled off substantially, but you know, here is what I'm talking about. First really big day in intra-index divergence, close to 2%. Russell 2000 IWM or TF futures up well over 1%, while the NASDAQ was down actually over 1% at its worst today. This is not the sign of a healthy market, to say the least. At minimum, it speaks to a pullback. You tend to see these divergences. You know, they could be rotation. It could be, you know, the down move's already started in NQ, and people are trying to squeeze the last out of the move, the big up move in the Russell. You know, recall that IWM was extremely beat up on its way on the down move. We'll go to a chart of the IWM. You can see that, you know, despite how bullish everything feels, we're well below highs, and this was our all-time high of middle of the summer last year. There's a descending trend line, which if you draw it between the last two peaks, we're still well below. That may be a target coming up, but I think we're going to have a pullback fairly soon, and so a number of things are pointing towards that. So let's look a little more closely at those. The intra-index divergence, and by this gauge you can see exactly how bad it was. You know, you've got almost a 2% divergence. Anything over 1% is starting to get unhealthy. So we're getting into really unhealthy territory here on the indexes. Let's move on to some other bits. This is our trend page. We call for a neutral range day. We stayed in Friday's range, so that worked out correctly. What I would like to point out here is that the dollar-weighted buying pressure was sold for much of the day, although we had a little bit of a dip, a little bit of a buy. We ended the day down, and it was sold for more of the day than it was up, certainly by quite a bit. So these are your dollar-weighted net volume of key market-moving stocks. It's our own index. Have a look at how different this is to the our version of the McClellan intraday McClellan oscillator, which is a faster-moving version of the McClellan oscillator. Basically, you know, this was up most of the day, and the dollar-weighted. So there's some distribution going on here. You know, we'll go look at the market map, and we'll see that advanced decline ratios were positive, but, you know, NASDAQ 100 barely, S&P 500 barely, NYSE, yeah, almost 2-to-1, but not massively bullish. NASDAQ combined 2-to-1. You know, the Dow a little less than that. Russell was by far the most bullish, although the trend was starting to get close to the one level, which sort of is the demarcation line between the bullish and bearish scenarios. You can clearly see that NASDAQ 100 trend was bearish, and so was the NASDAQ combined, although just barely. So it's not a picture, you know, we've had a strong move. We've had put a lot of points under our belt on the NASDAQ, on Russell, on S&P 500, but some things are starting to get a little unhealthy, yeah, as we saw on the trend page. So yeah, so we've, despite the you know, that picture, the NASDAQ volume delineator, which is net volume on the NASDAQ, was quite bullish. Everything else was slightly bullish, I would say. The volumes were a little more bullish than the advanced declines. Trends are starting to get into that territory. Certainly on Nasdaq, that's getting into slight neutral to bearish. We're getting into neutral to bearish on the Russell as well. So volatility is the thing that I want you to focus on now, though. We've had a good move down in the VIX. We got down to the 16s, which is well off the high. I think we got into the 30s. So volatility has come way off. Having said that, the VIX was below its daily Bollinger Bands, I believe, on Friday. So we expected the start of a corrective move. And so what you're going to see in volatility is the VXST, which is the 9-day version of the VIX, is going to move up earlier and faster, make a bigger move than the VIX. So that's going to be a little bit of your early warning system. And VXST was up all day, closed about 10% up, while the VIX was only maybe about 2.5 or 3% up. VXV was maybe 1% or 1.5% up, so not much. But the move is confirmed because the VVIX, the volatility index, it's like the VIX of the VIX, rose. It came up off out of the basement and closed well in neutral to slightly bullish for volatility. Despite this quite severe contango between the futures condition, we're looking very closely at this. So we're seeing some signs with the intra-index divergence and the positioning of how volatility is set up now. This could be a day or two early, but we're looking at a pullback about to start. Now, in terms of catalysts in the market, Thursday is a big data dump day. We've got a ECB press conference at 8:30 in the morning. Also at 8:30, we've got jobless claims. That tends to be a market-moving piece of data. Wednesday, there's quite a bit of data too, but I think the big news for the week is going to be this ECB press conference on Thursday morning. So tomorrow could be a slight down day, or it could be a range day, or indexes may indeed make a final gasp move up. But let me get to the SPY here and see where they are. So SPY's over its 100-day simple moving average already. IWM is not. So IWM had a lot of catching up to do. So I guess we're going to see. But I believe, we've had 1, 2, 3, 4, 5 up days in a row, starting to get into the territory where things are going to pull back. And certainly those divergences are not looking great. Onto the bonds space, we're seeing that just seeing the very beginnings of bonds coming off their floor. Especially TLT was a little more bullish looking than the 10-year today. So I would keep an eye on volatility and the 30-year bonds, or TLT is the 20-plus year bonds, right? 20 to 30 years. 30-year bonds with at least 20 years of maturity left on them. And so here's another way to look at this is VXST on another view. Came up off lows, so did the VIX, so did VXV, the longer term. So, there's some duration in this, in terms of implied volatility. This isn't just a little VXST pop. This is moving 3-month implied volatility as well. So, and XIV has pulled off its highs. So, let's go back to I want to show you this move on the block trades. Actually, I'm going to open up the volatility block trades page, and just take a second for that to load. So we called this move on Twitter and StockTwits that VXX may have bottomed on Friday in the afternoon. We got a large live print, 2157 level. 3 million shares. That's a big print on VXX, and that's what you tend to see at bottoms in volatility. We saw basically some reasonable sized prints up at highs on XIV, confirming this move, although XIV is lingering around these highs, so it's not a confirmed bleed off on XIV and a move up on volatility, but we're above the print level already, above the big print level on VXX. We've got another big print just above that here, so that's another 1.15 million shares. And so we'll look for that level to be the line of demarcation above the big print. We're bullish VXX. We get below it, we'll have to be bearish. Volatility still for the time being. Yeah, what I did want to mention some things. I guess that's basically our quick little summary, is to be cautious in the market. We're seeing some signs that we typically see at turning points, although they can be a day or two early. That aligns with the data dumps that we're getting later in the week, ECB and some US data. So on that note, that's basically our wrap. But I want to mention something about our block trades and just in general and the way we're looking at those. So one of our subscribers pointed out last week that he was getting some different numbers than we were on some of the prints. It took a little bit of investigative work. We spent a few days looking into it, and we basically had to go back through months of prints and the time at sales and timing and all, that sort of thing. It was quite a bit of work, but it was worth it, and I'm glad he pointed it out, because basically what it amounts to is the main data provider for our feed for the block trades. We have a few data sources, but the one that's providing a feed for our block trades is providing it in a time and sales format that was basically giving us a time and price that was accurate on trades that were live. Now, something you have to know about block trades is most of them take place in a dark pool. Dark pool reporting requirements mean that they do not have to, they're not obligated to report live in real time. Now, many of the trades do, as you can see, these and so on. But lately, we've had a lot of late prints, which means that they report them later than they actually occurred. So that time and sales feed which was feeding the block trades, was actually putting them out at a different price because it was feeding them live, as if they were live trades. However, they were not. We created I guess the easiest way to put it is an algorithm to seek out the individual tick identifier of every single block trade. So we are actually parsed all the information. We've separated time, price, volume, and all that, and we actually go and look backwards to find the matching print now. So I believe it's going to be, going forward, going to be a more accurate way of looking at these. So I appreciate someone pointing that out. We're happy to have this fixed, because I think providing the most accurate data to you is going to help you trade. And the way this is going to be viewed now, you'll see, although we've gotten a lot of late prints lately, so it might be exaggerated, but you're going to be able to see things like all of these prints that are off of the price line are late reported prints. So basically what we're getting is, you're getting a very clear level where you've got all these trades at the same price. That's a support level. You've got all these trades at the same price. That's a support level. You've got all these trades at the same price. That's a support level. So we basically closed right around the support level. 242 cents on SPY was a big level today. Tons and tons of prints there, and basically that's where we are. That's where we closed roughly. So we're going to have to be bullish above here because we have a lot of supporting block trades. We're going to be bearish below. But the main point is that look for these levels. Look for these late prints. Late prints are going to tell you something. there was busy activity, and for some reason they want to report them late. So it's going to be easier to see that now because they're going to be separated from the price line, which I think is actually a better thing. It's going to be a clearer picture. Okay, enough about that. The QQQ, a ton of what looks like distribution here at the highs. QQQ, NASDAQ has been the most bearish looking index for the last couple of days. It's below the prints now. Some really distributive looking large prints at highs on IWM certainly will be bullish above these prints, but you know, this is starting to look like it's long in the tooth. So a lot of things agreeing, coming together for a pullback to come. How big that pullback will be, we'll have to see when it gets started, and we'll have to see how strong a move in volatility we get, and we'll have to see how bearish the internals get. So anyway, I think that's our market wrap for tonight. Thank you very much for joining, and we'll see you in the next one. Thank you.